Hi, and welcome to our update for July 2021 on property and finance around Southeast Queensland. The first thing to note, which is quite interesting, is that they say that the Brisbane home prices were up by 2% for the month of June, and regional Queensland was actually up by slightly less at 1.9%. Now, this means that on a $600,000 property, 2% is around about $12,000. So over the 4 odd weeks of June, they're saying that they actually increased in value by about $3,000 a week on average. Now, what's really interesting of that is that ordinarily, in a normal market, you normally will see house prices increasing, a little bit faster in the capital cities, whether that be Brisbane, Sydney, Melbourne, etc., and then slower to a lesser extent in the regional areas. All right, but what happened in COVID is that changed and that swung around. You had a lot of transitions of people moving from the city out into the more regional areas. So you had people moving to the Sunshine Coast, up to Toowoomba, also down to the Gold Coast, getting free of the capital city. And you also had a lot of people moving from interstate to those places as well. And so we had 12 to 18 months transition of that where, if you have a look, the regional markets actually perform better because they're more affordable, and also because there's a little bit more lifestyle scene there. But it seems like from the reports that that's actually tapering off, and that we could be towards the finishing of that. Okay, so it'll be interesting to see how that turns over the next 6 months and see whether that continues. All right, now this will mean that you could see better price growth in Brisbane, and that'll continue, and then you might see a little bit of a slowing of those areas. Now, let's talk about some individual things that we're seeing on a sort of a much smaller level. The first one of these is I've got a few clients at the moment who are buying by auction. It's very popular at the moment to go to auction for properties. Queensland usually had a listing price, and then people would make an offer. But at the moment, because it's a very competitive market, a lot of places are going to auction or offers and all that kind of stuff. So we're still getting a number of our clients. A lot of our clients are missing out on buying. They're being the second or third or fourth highest bidder at an auction. But what the online auctions are doing, and what's interesting is when everyone registers for those, you can actually see the names and the details of the competitors. And I've heard from a number of clients over the past fortnight that when they see those other people on the online auction, they Google their names and they're seeing that nearly all of them are coming from Sydney and Melbourne, okay, and particularly the people who are winning in those auctions. And that's a little bit of it's a very, very frustrating experience, because it feels like it's the deck is sort of stacked against you because they're from interstate. But from our point of view, it's sort of like you've got to try and be aware that this can happen, so don't get too emotionally attached or don't fall in love with a home before you've had your offer accepted, and then B, before it's you had your finance approved and settled. And the other thing is just be aware that you have to keep doing your research, try and find some of those properties that maybe not so popular, that aren't listed, etc. everywhere. Now, there are some that are selling where people are in a situation where they don't want lots of people coming through their house. They may be older and they're a bit afraid of an auction sort of scenario, and they're uncertain. And there are still homes that are selling that aren't being listed on realestate.com.au, but to do that you've got to get in good contact with the agents and make sure that they know your budget and you're in the market. The next thing as well is we had a client this week who were successful in buying or putting a property under contract on the Sunshine Coast, and they had been looking at that market for about 2 years. Earlier this year, they missed out at a couple of times in auctions, and once again, it was that same thing where you had scenarios from people with Sydney and Melbourne with much deeper pockets, much more capacity to buy, and they outbid. Now, what these people did is these clients, they did a letterbox drop in that area over a couple of suburbs, and they picked out all the homes that they were interested in, and they letterbox drop, and then they got a response from one of those recently, and they made an offer, and they were successful. So hopefully we're going to get their finance approved in the next week or so. and then they'll move in another 5 or 6 weeks, and that was something that took a little bit more work than they had anticipated up front, but at least we got there, and they're very, very happy to be in that position now. Now with that last one, there was no agent involved, so it was a little bit trickier. We had to be more, aware of some stuff during the negotiation, and that's where, having someone who you can talk to about what to do, what steps come next, etc. can be helpful. All right, now for those of you who are wanting to get into your first home, we've had a lot of inquiry recently about that, so the next part of this video will cover a few things that we think might be helpful if you're in that situation or if you know someone who is. The first thing is we're going to look at some assistance from what the governments are, the grants that are available, and how they work. One of those is the federal government one, which is to do with what they call the First Home Loan Deposit Scheme, and it's an initiative by the federal government to help clients buy their first home and to avoid paying what's called lender's mortgage insurance. Now, if you're buying an established home, we'll look at the state government for a start. So if you buy a home up to $500,000, you don't pay stamp duty in Queensland. And then if you buy one between $500 and $550, you pay some stamp duty. And then above $550, you pay normal stamp duty. Now, one of the things about this, one of the crazy things about this is that cap of $500,000 hasn't changed in a lot of years, like in ages, all right? So 6, 7, 8 years. But in that time, you went from being able to buy a house in, for example, it might have been a rundown house in, Kangaroo Point and fitting under that cap of $500,000, whereas now you can't buy a house in that $500,000 price range unless you go a long way out. So although, that $500,000 cap, once upon a time it was significant, and it meant that, it could be a bit of a saving, but a lot of people are finding now that, with house prices increasing and that cap staying the same, that it's not as much of a benefit now as what it used to be. The second thing is the First Home Loan Deposit Scheme. When the government brought it out initially, there was a cap on the house price for that of $475. Once again, as house prices have increased, that's become a little bit negligible as well. Like a lot of houses, don't fit under that criteria. So the government took on board some of that, feedback, and they increased that to $600,000 for an existing house, as at 4 days ago on the 1st of July 2021. So if you're buying, first home buyer, you're an Australian citizen, you weren't under the cap for the income, etc., that could be an option for you. There's 10,000 spots released, and I'd expect that they would go quite quickly because increasing it from 475 to 600 has definitely made it a lot more relevant for a lot of people, and so I think you'll find a lot of people will jump all over it. If you're building or buying brand new, there's still a $15,000 first homeowner grant from the government of Queensland. That's to help people to buy and build their own home, and that is effectively a building grant, so it's linked to the building of the property. So it's not when you're buying the land as such, but it's something you can factor in when you sign a building contract, etc., and you can use it as part of your deposit. If you're in that situation though, when you are doing a first home, buying a house on land, you can spend up to $650,000 to get under that cap for buying or building brand new. All right, so where it was $600,000 for an existing house, it's actually $650,000 for buying brand new. Once again, that can mean that you probably will be spending around early 300s on the land and then about the same amount on the build. All right, so if you're looking at what a budget would be across that, it's about $300,000, high 2s, early 3s for land, and then the same amount for the build. All right, the issue with that though is at the moment we're finding that there's not really enough land for people who are wanting to build. All right, so there's been a little bit of a surge in people who are buying and building, but the actual supply of land and the amount of land for sale just really hasn't kept up with it from my point of view. So what that means is if you're looking at putting some land under contract, a lot of the land that you might be buying, it's not registering for a year, 9 months, 12 months, 15 months from now. So what's important about that is it's not about what your finances, while your finances today are important when you're buying some land in that situation, it's also really important that you have a plan of what you've got to do, like how much deposit you need, what sort of income you've got to need, what debts you've got to reduce or close or pay out in order to get ready for the finance when your property or when your land is ready to be registered. Because when it's ready to be registered, that's when it's ready to settle, and that's when you need to apply for finance to get your loan approved. So a lot of conversations, a lot of talks about that, and people ideas. If you'd like to know more, don't hesitate to get in touch, and we hope you have a safe July 2021.